Hey, what's up, everybody? So before we get started into this, and before I let Jbake take over, the beginning will be mainly about his volume analysis parts and everything he's going to be cover, how he trades and how he views volume and how you should interpret volume. And then at the end will be a couple different sections I added on. But please, as you see in the beginning of this video right here, there you see these few educational channels. We will be adding a volume channel here, in which you can see a lot more of Jbake's discussions and more of the stuff he can't really talk about on charts or break down as in deep. He will be having in a text channel here under this same educational section in our main server. So if you want to check that out, that's where it'll be. And also one more thing, this is one of Jbake's first bigger videos, and if anything, one of his first videos that he's really recorded for. So definitely cut him some slack. He did a very, very good job. I helped him kind of go through it a little bit, but I think he did a really good job, and I can't wait to show you guys his amazing volume breakdowns and how he interprets it. So I hope this is useful for you guys, and if you definitely can, please leave a like and comment on this video. Thank you.
Hey, what's up, BB community? This is Jbake. Today we're going to go over some volume price analysis, and basically we're just going to dive into volume, the importance of volume, and how we should, or how I at least interpret volume, and how you could interpret volume yourself to make better trading decisions. This is a very deep topic, so I won't be able to go over everything, but we will have a channel set up that you guys will be able to view this stuff, and we'll post it in the chat for you guys all as well. So yeah, we'll go ahead and get right into it. All right, so what is volume price analysis? Volume price analysis is basically the study of the relationship between volume and price. So basically, what we're doing is using volume to validate what we see on our charts. So basically, what is volume price analysis? Volume price analysis is a study of the relationship between volume and price. Just to put it more simply, all we're doing is just using volume to validate what we see in our charts. All right, so what is volume price analysis? Volume price analysis is the study of the relationship between volume and price. All we're doing is just using volume to validate price action, and just to give us an understanding of the market sentiment, whether the trends are weak or strong, or if we're in a ranging market. It's just a good indication of overall market sentiment. If you don't know what volume is the number of shares that are being traded in any given session. Volume appears everywhere, no matter what time frame that you're on. It appears on the weekly, the daily, 4 hour, 1 hour. Every time frame has volume, and it's really, really important that we use volume in our trading, just for quite a few simple reasons, but some very big reasons at the same time. Um, like I said, it shows the strength or weakness of a trend, but more importantly, and the importance to me of why I use VPA is that it shows when insiders are coming in and going out of the market. Now, why would I want to think about volume in this way? It's very simple. Um, we have market makers, and the purpose of the market maker is in the title of their name, to make a market. How are they going to make a market? The only way they're going to make a market is if they control majority of the floating supply that's in the market. So how are they going to do that? Well, this is where volume comes in. And so the main job of the market makers, the insiders, hedge funds, whatever you want to call it, we're just going to call them insiders. But the sole purpose of these guys is to make money off of our fear and greed. They play with our emotions. They do numerous tricks to get us to make very bad investment decisions that they can capitalize off of. And one of the things that they use the most to their benefit is news. The media is like their biggest weapon. And it's also one of the reasons why I personally don't really look at news too much unless it's like economic news, things like that. Obviously, that's important, but as far as just like individual stock news, individual company news, or just like rumors and things like that, I don't really pay attention to that, just for the sole purpose that, like, if that stuff, if that stuff will have some weight in the market, it will already be priced in, at least into me, because insiders will already be in before most of us will be. How many times have you seen something skyrocketed and you just ask yourself, "Oh, what was the news?" I'm pretty sure more times than you can count. And that's just like how it goes. Like things are going to move, and then by the time it moves, the news by the time that it does move, the news that you were looking for, it's already going to be priced into it. So it's just best to look at the charts because that is when you're going to see when these big money institutions are in the market. So what are the three basic laws of volume price analysis? The first law is the law of supply and demand, which we all know. But basically, if you whoever doesn't know, basically what this means is that when demand is greater than supply, price will rise to meet that demand. And vice versa for supply. When supply is greater than demand, prices will fall with the oversupply being absorbed as a result. So basically, basically, whenever we're in demand, prices are going to rise just because there's more people wanting that stock than there is to go around. There's not enough to go around, and when there is too much of something and not a lot of buyers in the market, prices are going to come down so they can look more attractive to those buyers. So that's the first law. The second law is the law of cause and effect. That just basically just means like whatever the greater the cause, the greater effect, and that is when volume like really starts to come in. So examples of the law of cause and effect. Basically, if price or if volume produces little movements, you expect price to make little movements because the cause should be in direct proportion of the effect. So whenever we see all these little volume, you expect price to move like that. It's not really making that much movement. And then it's also vice versa for these high volume candlesticks. You see as volume starts to pick up, the cause is getting greater, you start to see more price movement, the effect. And that is the second law of volume price analysis. The cause should always equal the effect should always equal the cause. And then the last and the most important one to me out of this would be the law of effort versus result. And this ties into the law of cause and effect, um, but in a slightly different way. So basically, the law of effort versus result. And I'm just coming over here really quick. I had this example. So right here, this is a good example right here. So if we're going by the law of effort versus result, which is every action must have an equal and opposite action, uh, basically saying that price action must reflect the volume. So what we have right here is we have this doji here that made a narrow body, and we have this high volume candlestick right here. Now, if we're going off of the law of effort versus result, this amount of volume should have pushed this price farther than it did. This should have closed at least at the bottom of this candle, but it did not. It closed in the middle. So all that effort right here amounted in this little result. That is There's something not right there. So that just basically ties into law of effort versus result. Now, something like this right here, law of effort versus result, declining declining volume on these two, but it's not that much volume really. So there's just minimal pullback on this right now. But as you start to see volume increase, you start to see volume really drop, which matches the effort of this result right here. So just keep that in mind, that like volume should be relatively in proportion with price action, at least like the spreads of the candles. This will all, like I said, this should be relative because not every stock has the same volume not every stock has like the same amount of volume. Some stocks do have like are way more liquid, so they're way more volatile and will have more volume. Some others won't. So you just have to basically base your analysis off of the candlesticks or the volume bars like to the left to determine what's above or below average volume. All right, so in volume price analysis, the two things that we're mainly ever looking for are validations and anomalies. And what I mean by validations is just for volume to validate price action. And what I mean by that, this is a good example right here on this Walmart chart. So what we have here is this huge candle, this huge up candle breaking out of this range that it was trading in for quite some time. What you see here during this whole time is that uh, you just have price trading within this range on low volume. And let's get to right here. So right here, once price hits here, you see that it's going up, but you have lowering volume right here. So this should be a first sign that this uptrend is is basically not like legit. Because if this was legit, volume would be rising as like price is rising, but it's not. So this is basically an anomaly. This is basically like an anomaly. So because it's like invalidating the price movement. Like I said, volume should be rising with price, but it's not. Uh, let's go over to the right here. So you see that we have price still bouncing right here, and then we have this huge candle breaking out of this range. And look what we have here. We have high volume, above average volume. And this right here is what validates price action because it's in direct proportion with this candlestick. This is the law of effort versus result. You see all this effort of getting out of this range, and you see the result. So this is validating the this breakout right here. And as we move to the left, you see price, even though it's trading sideways on very low volume. So here we are again, still law effort versus result. This is validating price action. So here, right here, we have this huge up candle breaking out of this range. Um, and this is a validated breakout because we have volume associated in direct proportion of this candle. Now, this is important for many reasons, but the main important is this is when the insiders are showing that they're in the market. This is so much volume right here. Like this is like just think about all the money that's going into this if you really think about this. Um, it takes money to move the market. Money that you and I like don't really have, at least like not right now, but it really takes big money to move that. And big money comes from like the institutions. So seeing that this we have this high this widespread candle on this really above average volume bar really speaks to us, letting us know that yes, not only do we see interest in it, but also the market makers, the institutions, all of them do too. So this is all good. This is a valid breakout. We're good to go. All right, so here we have after the breakout, this valid breakout, we have sideways action going on low volume, which we want to see after a breakout. So like if this was to if this was to go up and come down back immediately, then we would know that's not like a valid breakout. They're either the market makers or the insiders, they got hit by a wave of selling, something like that could bring the market back down, but it didn't. So there was like no sellers really. And still no sellers at the top. So this is like really good that this is still being supported up here, especially on this low volume, which you want to see. As we get to over here, after the consolidation, you have this push up right here, and then you have this doji on high volume right here. And this is a really important candle as well too. The reason why this is important is because it shows indecision in the market, but this also is a telling sign as well though too that this right here could also be controlled selling and could just be a pause in the trend for now, but it is just telling us that there is indecision. at this time, and that we could see a cool off at least like for the short term, and which we did. But after we do see this pullback coming down here, what do we have here? We have lowering volume. And this stuff all ties into the BB system. Bueller talks about this all the time. Like when you want to see on the retest, you want to see lowering volume on the retest. This is no different. Like we're still looking for lower volume on the retest, but the way that we're viewing it is that like, all right, is this are we seeing this going to be supported by the insiders? Are we going to see if there is more sellers going to show their hands? Like we're just looking at this like in a more we're looking at this as an insider, like from an insider's point of perspective in a sense. But we can move on, and here we have here another breakout on good volume above here. Really, it's above. Really, it's above here, but still, that's a valid breakout because you have this widespread candle on this high amount of volume. There we have again, and uh, also too, this right here, this indecision, this is still showing weakness in a sense because this is the first sign. This is like the first sign of like struggle that buyers and sellers had, and this high amount of volume definitely tells that though too, because like I said, it's the law of effort versus result. If we have this much volume, then we should see a wider spread candle, whether price closes up or down, should still be a wider spread candle. So this is like really the first sign of weakness, but it doesn't mean that price is going to automatically reverse. Could just mean a cool off, which we did have right here, and then a resume of the original trend. But now we're getting here. We're getting over here. Now we start to see high amount of volume in this area. We get to here. This is valid. This is valid. But now we have this candle right here. And what do we have? A drop off in volume. It's basically like almost like under half of this volume right here. And this is like a telling sign that now this is like really starting to get weak because of the law of cause and effect, the second law. For this cause should have had a greater effect. But what was the effect? It was the opposite. It was sellers coming in to the market now. So now this right here, the first sign of weakness, we have the second sign of weakness. Now we should be really cautious of like a bigger pullback. And we do have like this pullback here. And I know this is all like in hindsight. This is all in hindsight, but the more you start to read volume in this way and really like develop an eye for like to read it, like you'll be able to spot this like with like no problem. The five, there are concepts to VPAs. Like you guys already know these concepts, but you guys already know these concepts just from like they're just basically all trading terms that we all know. But I'm just going to put them all in context for you, and basically give you a full example from like start to finish. And um, also to a lot of this stuff that I am talking about, this stuff has been going on since basically the start of like the stock markets. This stuff has basically been going on since like early 1900s. So all the stuff that I'm talking about, this stuff has been tried and true tested, has been developed by like some of the most like well-known, most successful investors as far as like Richard Wyckoff, Jesse Livermore, um, Anna Cooling, she is actually the one that I have learned not personally from her, but I've read a lot of her books extensively, like on this subject. And yeah, it's this stuff has been going on and will be going on, and we're just gonna dive right into it. So um, the five concepts of VPA is accumulation. We all know this accumulation, just um, basically and to give you an example, it's just basically like a warehouse, just like stocking up on inventory. And an accumulation phase, that is what the insiders are doing. They're just stocking up for the move higher. for the move higher. The distribution is just the opposite of the accumulation, just selling out of all their inventory and getting ready for the move down so they can fill back up their inventory just to get ready for the next accumulation phase. The second concept is testing, and basically that's just like involves like retesting to see if there are any buyers or sellers in the market before they mark the price up or down. This is basically like Bueller's 80% entry, like when price breaks above and then retests that level. That's just basically testing. That is basically the insiders, excuse me, testing to see if there is still any buyers or sellers out there. And then we have selling confirmation. Yep. And then we have selling climax is the fourth one. That's just basically when the MMs are selling everything that they have, and you will notice this at the top of trends with high volume. I mean, like just unusually high volume, and price isn't moving nowhere. It's just stuck at this barrier, just stuck at this level, cannot break through, but there's so much volume activity going there. That is normally just MMs just basically selling everything that they have and getting ready to move the market down. And then the fifth concept is buying climax, and that's just the opposite of selling climax. When you just see high volume activity at a support, but price is like having a hard time getting through it, or is not able to get through it. That's just buying climax. They're just buying everything that they can, uh to basically from whoever is selling. And how do they do this? So like how do they get from accumulation to distribution, testing to selling, and then back to buying? As I said earlier, the media is like the insider's like number one tool. Like that is what they use to do these campaigns, as I could as I could say. And I'm sure you guys all notice, like when good news is coming out, good news is normally coming out like when things are like already moving, you know what I mean? And then when you get to the top of a bull run, you start to see like a wave of good news. And it's just not like one stock, it's just like about the overall market is good. And that is when you start to see so much good news start to come out, you should definitely start to be cautious. That's because that is the insiders playing off our emotion of greed. They know that when there's good news, they see markets like moving up, and markets continuously moving up, and there's so much good news coming out that like you can't miss out on this opportunity. If you miss out on this, then like you're going to regret it. That is when you need to start being cautious, because like to you, or I mean, not to you, but to some people, they would think like, oh, we're in this like a credible bull run. We're about to get ready to just like take off. We're about to get ready to go to the moon. But insiders, they're getting ready to move down, because like they need people to sell this stuff. They need people to sell their shares too. And what's the best way to do it? Sell it to people who have that euphoric feeling of like making just basically making a fortune off of this play, and just they're just basically, playing off our emotions. They just want us to make dumb decisions. So just watch out for like that stuff. And then on the other end, on the accumulation phase, you start to see just a lot of bad news. Like you'll see bad news like it's basically like doomsday, like the market's crashing, everything's just like, everything's just like going bad right now. And like that is just market makers or insiders. That is just them getting ready to move the market up. Like there's putting out all this bad news, so then they put fear in us, so we sell all our stock, our inventory to them. You know, they want us to sell all of them to them. So when the actual bull run does happen, they'll be the one making most of the money, and while we're just getting just little pennies here and there, as I should say. But just think of that like that though. Accumulation is like when you see bad news, we're going into accumulation phase. When you see good news and a lot of good news, we're going into a distribution phase. And as we make our way up from the accumulation to the distribution phase. And this is like a really good point because I know we all know that markets fall faster than they go up, and the reason for that is because as the market's moving up, the market makers don't want to scare investors. They don't want to scare investors too much, or they don't want to move the price up really fast, really rapidly, because they want to keep us interested. They want to keep us interested in this, so when they do get time to like distribute all their sellings, that they have like willing customers to sell to. If they move this up super fast, nobody's going to be interested because it's already like too high. Like if this thing went from like if Walmart went from 105 to like 140 in like a day or two, are you going to want to buy that at all? I don't think you will. I know I wouldn't. That's just like that just moved too fast. Like why would I want to get in it? But if it's retesting, if I see price pulling back, yes, I would want to get in it because now prices are looking fair and they're looking attractive. Everybody wants to buy low, and no price is ever too low. So it doesn't matter. Like if price goes up here, if somebody sees a pullback, they're thinking, oh, this is a good price. It can move up here. It can move up here, come down. Oh, this is a good price. I'm definitely getting in it. And like the theme continues until it gets to this climax. All right, and next, after we have this test and this markup here, we start to get into the selling climax phase. And I touched on this earlier that normally in this phase, you will start to see high volume amount of activity with price not really advancing. And here this we have price in this range right here. And what do you see? We have high volume activity, right? We have this breakup here. Then we have this inverted hammer here on high volume. We have two on high volume right here. And then as you see, this price is pushing up. We have lowering volume. And then we get to this candle, this hanging man right here. And this hanging man is a reversal candle. Um, and you see this is high volume right here. If we're going by the law of effort versus result, this should have been a wider spread candle, but this is not. And as you see here, this is in the same area as this high volume red candle right here. So right now, this could tell us that we are in the selling climax phase. And what do you see here after we have this candle? We have this red down candle, and we start to have a move out of this zone and starting to mark the price back down. And on this candle right here, yes, this is a narrow spread candle on some high volume. But if you get down here to this down candle, on this candle, it's less than this candle right here. And if price is going to go up, it's going to need some volume to go up, which it did not. So we still have this markdown coming. And now we have a pickup and volume and a push down to support, and now we're in the start of the distribution phase going down. And as you can see, after we had that high volume, price has been steady declining down, and we're back down to the accumulation phase where we start to see high volume activity. And this is all just textbook. This is all what we want to see in these phases. We want to see high volume and accumulation to let us know that we could be in the start of a bull run. We want to see high volume activity at the top of these distributions to let us know that we may be starting to go down, that we may be starting to come down. So it's a good time to get out. Volume is key. Like volume is just really important because it keeps us in a trade and it helps us get into a trade as well. So when we see these signs of reversals, at least the first signs, that we shouldn't just take them and say like, oh, the market's going to go down or the market's going to go up if it's a hammer. You want to see more confirmations. Like you want to have more than just one reversal signal, as you see up here. And the reason is quite simple. Like an object in motion will stay in motion for some time. So instead of just getting in at the first one, let's give the trade some time to work itself out. And this is a good example right here. We have this shooting star here on high volume, which we want to see, especially on a reversal. But this is the first sign of reversal. So we should be cautious on it, but just know that this trend is starting to show weakness. Now, as price is coming down here, we do have volume picking up, but it's picking up into this support right here. And as you see, we got a bullish engulfing. So this market is not ready to move down yet. So we're still going to be trading in this range most likely. And as you can see, price bounced off here, is coming down, and we have this low volume associated with this. So is most likely going to be trading in this range, which it has. Now we get down here and the push up on volume. We have this push up on volume, and now we get up here to this high volume candle that leads to this. And this goes back to the law of cause and effect. Look at this right here. We have this breaking out right here. This is the cause to break out of here. But what was the effect? The effect was this bearish engulfing, basically. That was the effect. And you can tell with the associated volume that cause did not really have too much effect. So this definitely should be a tall tale sign that this trend is definitely starting to weak. And we have a pullback on some good volume as well too. But price is still being supported here. So we still aren't ready to go down yet, but we are still seeing signs of weakness. Now we get up to here after this bounce right here. And just to touch on this part right here, you see that we have high volume activity going on in this area, and which you want to see if you want to find support at at any level. So this should definitely tell us that market isn't ready to go down yet. And also too, we are trading within a congested range. And the pattern that we're kind of in is like this broadening rising wedge, which is a reversal pattern. And as you can tell, we have this high volume activity, but price really isn't going nowhere. It's just staying within this range. All this is telling me is that we're in a distribution phase. That's all that is telling me. We have high volume activity going on, but price really isn't really advancing so much out of this range. It's just been trading in this range. So that is another thing to look at to tell us too that like, all right, we have all this high volume activity, prices are going nowhere. So this is definitely now we can definitely say that this is really starting to weakening, especially after we got to this third one. But just to move on though, just basically going through this stuff again, we go down, keep trading in this range, and we're getting more bearish, bearish signals of reversal. And then when we finally get down here, what do we have here? We have this gap down out of this range finally on high volume, and we have a push down here into the accumulation area, which is this support turn resistance area right here. And it's ironic that we're having this high volume activity at the point of breakout from this range. High volume activity right here, breaking out. We come back down, and what do we see here? We get some more high volume activity right here. So all this is saying that price is starting to be supported, and market makers, the insiders, are starting to come into the market. And I bet anything that if you check Uber around this date and see any news that may have came out, 9 times out of 10, if there was news that came out, it most likely was bad. It most likely was bad. 'Cause this is when the market makers are coming into the market. They want to buy things when things are down, and the only way to force price down is to put fear in us, and that's how the media comes in. And then when that happens, we have this high volume activity going on. Market makers are buying this stuff up, and now we have here markets are starting to move back up, and we even have a break of this falling wedge on rising volume. And look, we may be in the start of a bullish run, and this will all be validated if we can break above this 5250 area on good amount of volume. But yeah, that's just all of what I really wanted to touch on for VPA. It's just using volume to validate what price action is doing. Use it to help validate your entries as well. You see high volume activity, just take that into consideration. Like pay really close attention to that stuff. Like you want to see high volume activity because that will let you know if it's a good time to get in the market. And if you don't see that high volume activity, it's probably not a good time to get into the market because you're not trading in the direction of the big money. And once again, like this is a lot of stuff. This is a deep topic. So if you guys want to learn more about this stuff will be in the text channel. You guys could definitely reach out to me as well. And yeah, thanks. Hope you guys found something good with this and happy trading.
All right, onto the trend change. Onto the trend change analysis. So what exactly is this trend change analysis that we always talk about? So this is just one of many ways we would really like to see a chart set up to start a bigger breakout. So what you're seeing on this chart right here on UNH is a good, strong resistance line on top. And so how you grab these resistance lines, and you guys have seen this in plenty of my trend line videos and TA routines, I always like to have at least 3 to 5 points touching those lines, or you always have to have at least 2. If you don't have at least 2, it's just a made-up line, and you never want to rely on current price. So never once should I have a line go from here to like here. You know, that's not a good line because I'm going from I'm going from another point, but I'm having to rely on current price. That's kind of like a pivot foot in basketball. It's going to keep moving, you know, so it's not really helpful right there. But as you can see, they're a very strong resistance line on top, and this is a mentorship example we had from a while back. So this is kind of why I'm starting with this one, and then I'm going to break off into other examples and just kind of rant off on about just trend changes for a bit. But as you can see, though, very strong resistance above this stock on UNH, United Health, very big stock. But let's just start with just the basics. So the basics is getting your resistance line, and of course this can also be for uptrends too. So let's say you have a very strong uptrending stock and you want to see it break down, you know, then you would be playing off your supporting trend line, not your resistance trend line. So I'm just doing off of resistance trend line because it's a lot easier. This is really where we take a lot of our bullish trades. So I kind of want to show people where we start to conform our trade plans, you know, because sometimes people will be like, well, you're in early. It's like, well, no, I'm still good, you know. So I'm going to show you guys all that. So here on UNH, you can see very strong resistance above it. You know, what are the 3 or 4, you know, different scenarios that can happen outside of this? So that's why I kind of went back to this chart because it hasn't totally exploded yet, and then I'll show you what it looks like afterwards. But as you can see, though, one of the first things that can happen out of this trend change is you can get a pattern play. You know, this is where your bullish engulfings pop up. This is where your morning stars pop up. This is where, you know, piercing lines, all that good stuff. Bullish haramis, you know, and we love those, trading those patterns. So as you can see, just being preemptive, you can see a good gap down happen, caught on a previous support from a bigger time frame level. So now you can start to be a little preemptive, you know, if the next day gaps up or if this day, you know, ends bullish, I can begin to be a little more bullish. So a few of the scenarios that you're looking for coming out of this trend change is preemptive patterns before the breakout. That's where I always like to start. So that's definitely one trading opportunity you can get in on. 2, as you can see right here, bullish engulfing. Right here, you're getting a preemptive morning star. Right here, you have a piercing line. So you do have multiple patterns popping up at the same spot. So you could see a base is trying to form right here. So that's a really good sign, seeing 1 pattern, 2 pattern, 3 pattern about to form. So very big there. So that's one big thing to start with. 2, the big scenario that happens after is either a big parabolic move out, which is, I mean, I guess you could say it's lucky because it's awesome. You know, if you're already in the trade and it pops off that big, awesome. You know, take your profits. Don't be greedy. You know, no one goes broke taking profits, so just take it off the table like that is. But that won't always happen. That's a very rare scenario in which it just parabolically flies up out of that. So, you know, you won't always get that, but definitely be on the lookout for that. If it happens, then you were in from that preemptive pattern play or whatever. So that's one scenario. A second scenario is a rally base rally in which you'll get a pop out of this little, you know, trend change, and then you'll get kind of a range trade forming, a range, and then you'll get another rally out of that range. So your confirmation will be kind of out of that range after prices kind of sat in between here and kind of bounced 100 times and then came back through and popped off again. So that's kind of what you're looking for those. Let's clear this again. Another big thing that you'd be looking for in another scenario is if price, sorry, let's add some of our levels again. Had to clear it for drawing. Let's just add those. But you know, another scenario, if it doesn't just rally, base, rally, you know, is a rally, base, and then a drop. You know, let's say it comes down and it does a double bottom from its breakout point. You know, that's a really big scenario we've seen a ton of times. You know, what's another scenario? a rally. I'm sorry, no rally. There's just a kind of base. It just kind of just exits sideways. You know, there's a few scenarios in which you'll see that where it just kind of like gaps up and then it just kind of like range trades to the right, and then it'll just kind of play the open range breakout. So there, and you'd be playing your open range breakout. You'd be playing about right there. You know, above that level, confirmation of your bigger time frame level, and below your support. You know, that's what you'd be playing. So there are a bunch of scenarios, as you guys can see, that ended up happening after this. But within all of those scenarios, there are a ton of trading opportunities. So as price comes down to this support, as price comes down to this support, as it breaks bigger time frame resistances, you can play scalping or day trading opportunities. For swing trading opportunities, of course, you have your tons of pattern plays, your open range breakouts. You know, so the next day, let's say stock ends up closing above our open range, you know, and then closes over this level here. That's an entry for a swing. You know, get in. You know, your first target's gonna be that 345. Your second target's gonna be the 350, and so on and so on and so on. So let's show you guys exactly what happened to this chart, and you know the different scenarios I can kind of break down for you guys. So let's clear that. Here it is. So here's the UNH chart. Where we're charting it right now is about right here. So you can see this candle did form up and give you a bullish piercing line. But let's see those candles I was talking about though. So we got a bullish support here with the bullish engulfing. Price kind of rallied up, slowed down, rejected the same little angle there, came down, gave us another little piercing line, pushed back up, rejected that same little angle again, gap down the next day, and then we got a piercing line close over. That's very bullish on the same support. So 1, 2, 3 candlestick patterns popped up on the same support against that same resistance little angle there that we were just looking at. And as you can see, price did slowly just kind of gap up, like I said in that other scenario, where it just kind of gaps up in range trades, and then it breaks that open range breakout. But let's go and see how we could have played that. So with our lines here in that gap range, you can see our downtrend, and you can see our price gapped up and just kind of range traded over to the right, and then started actually moving up out of the range. You know, that looks very hard to play on the daily time frame. But as a pattern trader who actually gets in at the end of the day, you would have had complete confidence in some of these plays that we were taking. One big entry, of course, was that piercing line. Second entry was on the breakout of this range, so we were on close of this candle. Of course, you had 3 days of reset, but not one of those days closed under this support of this gap range, as you can see. So not once should you have been, you know, at least, you know, emotional or scared to exit. You should have been totally just chilling on that trade, not emotional at all. You should be trusting the analysis. We just broke this downtrend, so now you know we're out of the super bearish area. So now we're out of that, and we're just kind of breathing. Imagine you just ran like 3 miles and you're a little tired. Right now, that's all this stock price is doing, is just breathing. It's getting some water. It just needs to chill out. And then that's when you get that exhaustion. You get that big boom, you know, and whether that's buyer or seller, you don't know. But again, you have to realize you are bullish. You're not bearish when you're out of these downtrend changes. So you're not looking for a bearish play. You're looking for this to keep holding this trend line, you know, and sometimes they're going to form different angles. You know, this one has kind of a sharp angle up. Some of them aren't going to be so sharp. Some of them will be even sharper, you know, so each scenario will be different. You have to take them as you can. So let's look at the next picture. As you can see, I'm highlighting that candle in the next picture. This is where the piercing line gap is at the support of the gap range. It's better if it's closed above, but that's a great indication that bulls are ready again. You know, so if this would have closed over this trend line, this would have been a lot better, but it didn't. So I'm still going to be preemptive on that. And again, that's why you see me kind of combine my pattern analysis. And you guys see that in a ton of my videos. I don't just play one pattern. There's always a few things there that get me confident in that play. So find those few things in your charts that get you confident in your plays. And I think this is the last picture, and then I'll break down the chart more myself. But besides the piercing line entry, we also got the range break after it did the trend change, as well as above the gap range on the close of the candle. So as you can see, you had one opportunity here as the range break. So what was the trading opportunities I was showing you guys? So we had 1, 2, 3, and then you have that big gap range right here, right? 4 after that candle closed, and now you're really looking to just chill out, because you got to look. You have a big emerging candle here, resistance. You can see it stopped about right there. You have another one up here, didn't even get up there, but you can see all the tops of your highs are about right up here. So these will be good future opportunities above these resistances, but as you can see, price needs to slow down, and you can see it's holding its little range now. So just a cool little trend change setup I wanted to show everybody. But let's get into actually showing you guys what this chart looks like now. So as you can see, all the analysis we were just doing was way down here. So as you can see, price has not just moved over, but it has also staircased back down and then right back up. But let's look at a couple things after for a good review. You know, what's a good little angle that it held? If you look, actually, it actually ended up holding this little angle here for most of its price action until it finally took that bigger retest, and then that's where you should have been taking it from. So, but let's see where that bigger retest is. Look at that. It's from that bigger staircase you guys were just seeing me break down about, imagine if it came down and actually did that. Just by marking your emerging candles, you have all those levels marked. Look where price ended up coming back down. So after all that ripping, look what it ended up doing. Pushed up another high. So you need to mark that high. That's a good thing to note. Good thing to mark. Price came back down. 100% retracement of this breakout. Held this, pushed back up, gave us a bullish rectangle, pushed back up again. And look at that. You're still kind of holding that just massive angle right there. It's like the new angle now. And now look at you. Now it's finally breaking this little trend now. And now you can see if this doesn't end up closing over or pushing over, yeah, you can expect UNH to continue downwards again, because now it's the opposite of when it was breaking from down here. Now it's doing the opposite. Now it's doing it over here. But let's look at some other ones that aren't as developed just before I end this. I hope this is helpful, though. If you guys haven't gone into the pattern trading videos or gotten into any of the control points or any of the TA routine, you need to break all those down. Those are going to be very, very, very helpful in these videos. But here's one that we are currently in right now. Fubo, we're in for some August 20th, 35 strikes. We're actually aiming for the 37, 39s, and I'll show you exactly why. Just marking my emerging candles here. You could see we actually end up getting some of the best resistances we need on the chart. So it looks like if we end up pushing through 35.40s, we can actually expect 39.20s. So that's what I'm going to be looking forward to here on Fubo pretty soon. But let's break down the trend change analysis. Why did we enter this play? So we were a little late to the party, but we've already day traded this a few times. But as you can see, just on the daily time frame, and another really awesome time frame is the 4 hour. So if you don't like the daily, go down to the 4 hour and you'll end up getting more accurate trend lines. So let's actually see if I can get a better one. Let's grab from that high. And yeah, you always want to go for, see right now I'm just going from wick to wick to get the most passive I can, but 1, 2, 3 touches. You can see price ended up pushing back above it. Came back down and tested it right there. So it just goes to show, the trend line that we found is actually very accurate. So good to know. Let's go back to the daily just to break down some more. But here on Fubo, what do we see? So after price was kind of rejecting that same trend line forever, what did we see after? So we got that gap up, price came back down, it filled this gap and held as support. So that's a really big thing to notice. So we need to mark that gap range and watch for a close over that now, because we're out of our trend change. Now we just need to close over this gap because we've gapped up, came down, filled it. So now we know we definitely have a really big chance to actually catch support and try to move higher. What does price do the next day? It doesn't gap up. It gaps down, actually. No, it did gap up. Sorry. Red to green. Gaps up, and then you end up getting a push. No close over this, but again, you're not looking for a close over this candle. You're looking for a close over this gap range here. And then what are your main targets on, like on UNH, what were my main targets? They were all those major peaks on each side, so you could see down on this trend change, what are my major hill points? There's a couple here, so those are going to be my main 4 targets, as well as these bigger time frame levels for my left side emerging buyer candles. So that's what I'm going to be looking forward to as I look for more trading opportunities. Also, what did price do as it came down, held and pushed and moved more staircases up? It also has a newly formed bullish uptrend line. So now I can also base off of bounces. So anytime price retraces back to this trend line, I can now look for more bullish patterns, like a piercing line or a bullish engulfing, or anything like that. Anything that's going to bring me back down is going to have very high seller volume or something like that, where it's got a very, very high wick on each side and has very high seller volume, which I don't have a single one of those so far. You can see we do have sellers coming back down, but not one of them are with increasing volume. We don't have a huge wick to the top side. There's no crazy patterns forming, and we're still holding this primary trend. So we're not playing puts until price closes under that level. Okay, so yes, it looks like right now price could get a retracement back down to that trend line. So we can expect some slowdown going into this week on Fubo if it doesn't just rip through 35.40s. Let's check out BNGO. Why are we in BNGO? So earlier, we had played this move out of here. What we really liked was the bullish harami that was closing right under this trend change. So as you can see, we're getting our pattern forming under it. Price ends up moving up again. We get another trading opportunity. So if you weren't in this day, you could have at least gotten in this day. So if you weren't confident in the bullish harami before the break, you can at least be confident in the bullish harami, bullish breakout closing above the trend change. So very good trading opportunity right there. And as you can see, more range break again, more range break again, more range, and then another range, and then you just start getting more bullish. See, price had enough of its little slowdown. It didn't just parabolically run, so it actually had a chance to actually move up and gap up without being too crazy. It could gap up and not be super bearish. So now what we can do is mark that gap range, kind of like on that UNH chart. And as you can see, after price made its highs, this is just further analyzing. price came down, filled the gap right here, and is now pushing up. So now we're looking above 771s on BNGO for a further breakout, while also marking our other emerging candles over here. You know, marking these, marking your major peaks over inside of that trend change. And as you can see, most of them are marked now. I didn't have to do a whole lot from current price action because most of it is already found on the left side for price history. So let's check out one more. Apple is another cool one. I just wanted to show you guys this one because it goes to show it can even break down even Apple. But as you can see, just grabbing your common resistance, just right there, very ugly one. You know, the better ones are more like that UNH one where it has like a lot of price history inside of it, and it's just steadily going down. And then you get that pattern at the bottom. You get that trend change break. Price closes over. If you get an increase in volume like this right here, this is perfect. So this is another good example. So not only is it breaking and closing over right here, but you're also getting a increase in buyer over average volume. So that's very, very good. You can see that buyers are actually trying to accumulate here. Okay, so now what you're going to want to do is mark your control point of that. And that's a really big part of when I do these trades is I mark my control points of those big green candles. So what I like to do is mark my 50, and then I redelete all that again just so I can see if where price can go down and hold support. You know, so if sellers don't end up closing under this, buyers should still have support hold, which should carry price higher over time. It just takes time. You know, sellers are always going to be quicker. Buyers have to build, so it's going to take time. So we can grab from our low support here and see that price ended up holding support not only on our trend line but also on our control point. So now I'm extra confident because it's holding 2 points of support and it's outside of my trend change with a rise in buyer over average volume. So that's very awesome to see. And I hope to see some examples from all of you. Please drop them in chat. Please drop a comment on the video of a ticker that you think is doing it, and let us know, and we'll get back to you. We want to help everyone as we can, but I hope this was super helpful. All right, so welcome anybody in voice chat. I'm going to record this for anybody who isn't in here. But again, this is just the TA routine. So one of the most really easiest, most simple, and most effective charting technique is the TA routine. And really it is so simple because you're really just marking the tops of your buyer candles, you're grabbing your range around price, and you're conforming a trade plan around where current price is. So let's go through it and I'll show you guys exactly what I mean. So I'm going to close that. You're mainly focused on the weekly as your first step. Your first step, of course, is going to be marking your range. So you want to go ahead and get your high, get the meat of your high on the weekly, just so you have a good range start. And then you're going to want to grab a good emerging candle on the left that's been tested as a support before the run up. So that's a really good spot. That's a really good spot, and that would be a really good spot. All marking good emerging candles along the way in which were used as support. But the best, of course, is going to be about that 160, 70s, of course, you could see because it's the support of the recent support catch. So going to be looking now around that, and now I don't really have to add anything else. I kind of have my range around where current price is, the little staircase area it's in. But you know, just to kind of break it in a little further, though, you know what I mean by staircases is this. You know, you see the push up off your primary trend line, you have a secondary trend to your primary trend line. Primary, secondary, primary, secondary, primary, secondary. And now you're just getting a bigger secondary under in which it broke this big trend line right here. So that's really all you're witnessing right there, and that's why I say staircase like that, and why I'm trying to see a build back up. You know, your sellers are of course going to be always quicker, and your buyers are going to take a longer time to build back up. But of course you can still analyze this stuff over time and catch these plays as they are trying to recover over time. But now the second step in this is going down to the daily, and you're going to want to catch some more emerging candles like you just saw me grab on the weekly. So now that we're kind of focused on this range, we can kind of just zoom in right here and just focus on that. So starting here from the left side, just like a book, you always start left to right, and you're going to want to start marking the tops of your buyer candles. If you want to mark gap ranges too, that is just as effective. That was an awful line. That one, emerging, emerging, top of buyer, top of buyer, top of buyer. And that's about everything I need. You know, you keep going as much as you want, of course, depending on the chart you're looking at. But just to kind of get it around price, you want to just focus on like right here. So you wouldn't have to worry about all that. But if you want to just go ahead and throw all these on there, you can, because that's another cool thing about the TA routine is you can leave these lines on there forever, and they will still work out for you in the future. So you don't have to, you know, keep worrying about going and resetting your chart. And if you are one of those people, that's another cool thing. You can delete your chart, do the same little routine, and you should still get the same level. So you know you don't have to sit there and worry about not getting the same TA if you clear your chart. So now that you have all your emerging candles marked on the weekly and daily, we can focus on what's going on here with just current trends. So a big time frame I really like to check this on is the 4 hour, just because you get both the kind of the daily's price action. You don't really get a lot of the, you know, extended hours price action shown to you because you're on the daily. So let's get down to the 4 hour where you can see it a lot more. And as you can see, we have a really, really good drop here from that big earnings. You know,
run up to it, and then it had the earnings, and then we dropped more, and now we're building our base. And now you can see we've been building higher lows ever since. So I'm going to be kind of focused on that higher low trend line, about right there. Not the most perfect line, but it doesn't have to be. You just need to get a really good line right there. And then I'm going to go ahead and get this top line too, because I really like that we ended up dropping to here, and I can kind of get the tops of my buyers there, 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 and there. Every time we hit up against that same little angle, we ended up dropping back down. So as you can see, we are actually trying to break out above this on Etsy, while also trying to fill this gap right here on the daily, which that's another thing you need to mark too in your little notes. At the end of your TA, after you're done marking your levels, go in your notes and write down some stuff. There's a really huge gap between 167 and 184. So that's the gap range I'm going to be looking to recover. And as you can see, that's what price is trying to fill right now. It might not perfectly fill it right here, but it is already almost done. So very nice to see that. And of course, you're going to be looking against this for a bigger breakout, or against this for a slowdown recovery, and then a bigger buyer to come through. And what I'd be looking at personally, you guys see me go through this all the time with pattern trading, is I like to mark my 50%. So if I'm going to mark my 50% on my bigger breakout candle, I can almost expect, if there is a slowdown here, I can almost expect them to retest this line, to retest this line. So I have two really, really good spots to look out for in case sellers do come through and make this a lot slower of a recovery buy. So that's what I'd be looking at for on Etsy. And as you guys can see, I haven't even gone down the time frames yet. But again, this is to help you make a trade plan and give you a really good charting technique. So now that we already have all of our levels marked, let's get it on the 30-minute. 30-day, 30-minute is really cool because it gives you the last month's price action. The 30-day, 30-minute, that is. I think when it starts out, it gives you like 10 days or something. So, of course, you want to change that over to the last month. That's how I like it. But, of course, keep things how you like things. And on the 30-day, 30-minute, you're going to have some levels you're going to need to mark. And you're going to, of course, want to mark the tops of your buyers again. Any gap ranges you might see. Any common levels of support and resistance, where price might touch 3 to 5 times or a bunch of times. Even more than that is even better. So, of course, go through those smaller time frames and try to add everything you can. Think about your BB system, your previous day high, your previous day low. I don't have to mark that. It's marked right here. So I don't have to worry about that. It's marked here already. I don't have to worry about that. My pre-market's already marked. It's in the same common resistance as my previous day and a bigger time frame level. So that's adding up really big for Etsy. So let's say none of these candles were here today, right? Let's say none of these are here. Let's create a trade plan. Let's say price is right here about to open, right? Let's create our trade plan. We're going to say Etsy above, and your break above is that common level, also because it's the pre-market high and the previous day high, and it's a bigger time frame level. So you have three reasons why you like that level. So 182, let's just say 40, make it a little flat. So 182.40 is going to be our break above. Targets, what would our targets be? Let me move this over here. So targets, you already have everything marked. What if there's too wide of a space? There's a really awesome thing I like to do with the psychologicals, and you guys see me do this a lot. So what's a good psychological level between there? 186. There's another at 187. Then you have a 188. So you have a bunch of levels there. So let's edit this. Targets. So you have 184.35 as your first target. And as you can see, right here, you're about 35 to, a little bit more than that cents off of that target. If you were someone and you liked the, percentage you were up right here, take that scalp. You don't have to worry about that. But if you want to hold into your target and hold it, stick to the trade plan. Don't sit there and be emotional. Don't go DM 100 people. Don't freak out. Focus on what's in front of you. So let's type out the rest of our targets. So that would be our above plan. So we have our above plan done now. I don't really know where to leave this. That's where we'll leave it. So that's our above plan for today on Etsy. Down plan, we don't just plan for one side. What does the bottom side look like? What are we looking for on that? Another really big common level. Not only is it the previous day low, it's also well under all extended hours, and it's a bigger time frame level. So yes, we could have taken a quick scalp from pre-market low and targeted this level. So that would be one good scalp trade plan, but let's focus on the bigger levels and stuff. So 178, or I guess we could say 177.95 would be a good break below. So let's say 177.95. Let's focus on targets now. Targets. Okay, so next level is 175. That's about a $3 drop-ish. So let's see if we can find something in between that isn't just made up. Okay, so I really like this second little merging candle here that was also used as support. So I'm going to go with that. So the first target is going to be 176.50. Second target, 175.10. Third target 174.30. And you can keep going on 173.50, 172.20, 170, on and on and on and on. And you know, through that preparation, you have everything you need now. So now we have our trade plan for Etsy for the day. And now you can kind of focus on that, you know, and I'm not going to review the price. I'm not here to be Captain Hindsight. I was just here to give you guys a good example on why this technique is so useful. And not only are you utilizing this TA routine, but you're utilizing the BB system in which we promote as well. You know, that pre-market system, marking your pre-market high, marking your pre-market low, marking your previous day high and low, and you have really, really good scalp trading levels, but also day trading levels. So you really have all the intraday trading covered, as well as your bigger time frame. You just saw me go through this and kind of cover the patterns I'd like to look at. You know, why did I mark that 50%? Why I liked the recovery off of this. You know, go back through and actually analyze what's happening within that channel. You know, after price happened, or after price gapped down and dropped down to here, it made a lower low, ended up recovering, pushed up, started. Now we kind of have our resistance forming, kind of have our channel forming. Now price came back down, hit it again, and as you can see, it's slowly abiding by the buyer rule. You know, recovering very slowly. You aren't going to get buyers just instantly recovering instantly. That won't always happen. Buyers are always going to be a little slower. The recovery is always slower. That's for sure. Your sell-off is always going to be a lot faster. So definitely don't assume that things are just going to explode just because they're undervalued or at a very low area. As you can see, things take time. You know, if you go through, I'm not going to count, but that's pretty close to a month of price action just within one channel to get it back up to this gap fill. That's very, very impressive. So as you can see, things do take time. You have to be very patient and you have to abide by your trade plan. You know, so if we were taking that trade plan and we were taking those calls over this level, you know, what's my stop loss? My stop loss is that important level. You know, why would I ignore that? If price was to go back under that, you know, there's no point. You know, take the small loss. Don't sit there and hold a bigger loss that is not going to come back up. You don't know that it will. So just say that it won't, because you don't know that it will. Don't be sitting there saying, I hope it comes back up. I hope it comes back up. You don't know. So if this was your break above, and then it ended up pushing up and you were looking to take profits, you know, take profits. Don't second guess about it. If you were sitting in this trade and you don't like that it's kind of weak right now, you're still not out of this trade. This is your stop loss. You're still not out of that trade. There's no candle close past it. So until this proves you otherwise, you're still in that. So again, that's why this is super awesome, you know, but again, you have to hold yourself accountable. None of this matters if you don't hold yourself accountable. So that's a really, really big thing with, you know, not just going through the TA routine, but with trading the TA routine. You're trading the levels you have here. You know, holding yourself accountable. Go through each day through a red or green trade. Sit on that chart and review what happened. What was going through your head? What were you doing at the time? You know, think of everything you possibly can around that trade, and then reset your mind. Plan for a new, okay, on this weekend or going into Friday, you know, go find another chart, redo your TA routine, and if you need to do that 100 times this weekend, please do so. The repetition will throw it into you, and you will be memorizing every step of this without even thinking about it. You'll just be doing it off of muscle memory like the rest of us are now. So definitely stick through that, and I hope this was helpful. So I'll try and upload this later on YouTube, but this was just for anyone who was here or anybody in stream or anybody in chat, because I really want you guys to start posting your own trade plans. You know, it is, you know, I get it. If Tesla's flying, you know, I get it. You know, Tesla's rallying. That's saying one thing, but don't just sit there and chat and be like, guys, I think Tesla's gonna fly. No, go create a trade plan. You know, the more you do that, you're holding yourself accountable. Okay, so in the future, these things that you think are so hard, they're gonna be very easy and just a part of your everyday preparation. So definitely go into it with that mindset. This is really a growth thing. This isn't something you just get into and you just grow instantly. No, this is definitely an over the time game to be playing. So definitely be patient. Definitely hold yourself accountable. And I hope you guys like this. If anybody wants me to go through another example, I can.
But the few days ago, we were pushing all-time highs, and you know the market was looking good. And you know, a few weeks even before that, we had covered a video where we talked about, you know, where's the placement of all stocks within the major indexes. And the major indexes we're going to talk about today are SPY and Nasdaq. And this applies to every ETF and index. What I'm going to talk about, so you can apply this over to that as well. Just break down each component of whatever ETF or index you're looking at. So if you're looking at jets, of course, you're going to want to look at each airline and see, you know, what are they at on each chart. But what I'm talking about today, though, is how to truly analyze each index. So today, let's just start with Nasdaq. Let's just look at tech. So a couple weeks ago, SPY was at all-time highs. Nasdaq was not. It was trying to push up with the market, you know, so right then and there, I needed to analyze, you know, what tech is up the most, what is down, what's in between, you know. So I really started making like kind of a chart. So as I was going through it, I was looking down and I saw Apple kind of down here. At the time, which, sorry, let me just do this. At the time, I was Apple, Amazon, Facebook, Google's, Nvidia, Tesla. I was kind of just mainly looking at those. And at the time, you had Apple kind of. Let's just say this is the chart for all of them. This is the uptrend for all of them, right? For all tech, right? Let's put them on there. So Facebook at the time was at the top. The Googs were near the top. Google, Class A, C, all that good stuff. Microsoft was kind of in the middle of everything. It wasn't really at the bottom of its chart, at the trend, and it wasn't at the top of the trend at all-time highs. That's what I mean. This would be like the bottom of the trend. This would be like your all-time highs, and this would just be kind of like bouncing off of a trend line, not bearish or anything yet. Just kind of going off of where they at on their trend line. So Amazon and Apple were kind of down here compared to everything else. And then I was looking at the Googs, Facebook, all that. The semiconductors, they were kind of in the middle. They were kind of selling off, but also recovering. So they were in the mix of everything. And then you had like Tesla kind of sitting here and some more other heavyweights kind of sitting more at the top. But the main thing to note, though, was that Apple and Amazon were the ones that really needed to catch up the most. Facebook had already done its run. We could see it here. When Facebook was up here, Apple and Amazon, they were still fighting down here, not even close to their all-time highs, but they're still good, healthy parts of their trend. So they are laggard plays, I guess you could say, but that's not what I was getting at. What I was getting at is how you can play those. So now you go to your chart, apply your TA routine, apply your BB system for day trading, make your trade plan. If you don't know what the technical analysis routine is, go over, check out the playlist on my channel. Go check out the last couple videos. I've explained this very in depth and multiple times. It's an amazing charting technique. It's really the only one you need, but that alone will help you plan out these charts. But let's get back into the topic here. So big thing to note, though, whenever you're at any kind of crucial part of the market, you need to mark, is your SPY at all-time high? Is your tech at all-time high? Then you need to mark, your line like I did with my list. What tech stocks are on here and where are they? So now I know I have really good probability to trade Apple, and look what Apple ended up doing. It ended up catching up. Now it's pushing up and it's trying to break that downtrend change. Let's go see Amazon. Amazon at the time was down here. Now look at it, forming a morning star, popping out of its downtrend change, and now it's pushing back towards all-time highs. So two really big mover plays that you were able to catch just based off of kind of opening up your awareness, really making a little web chart or whatever you want to call it, and really analyzing, where is everything? At the time, Facebook. So Facebook at the time was about right here in the range. Now look where it's at. It's just still really up here in the range. Hasn't really moved a whole lot yet. Moved up one day, moved it down a couple days, moved up again, moved down again, moved up again. But it hasn't done a whole lot. Hasn't done this. And that's because it already did that. So again, you're not going to look for the laggards. You're really just trying to be aware. Awareness is everything when you're trading. So a very big thing that helps me is that, marking that line and then kind of just picturing in my head, where is everything? So I'll go on each chart and I'll analyze, where are they? Google's at all-time high. Google A is at all-time high. INTC, my semiconductors, that's a really good sector. You need to see where all that's at. Tesla, EV sector, where is all that at? You need to know where all of these are at on their chart in comparison to each other. Not, Tesla's at 700, AMD's at 40, whatever. It's where are they at on their chart? Where in comparison to where they are at on their chart compared to their all-time high. If their all-time high is up here and 9 out of 10 stocks on NASDAQ are already up there, and I see, Nvidia or something down here, I'm going to go take a look at that, because let's say the market keeps pushing. What do you think that one's going to do? Now it's even lagging even more. I'm going to for sure try and get into that play. I'm going to set my pre-market high or get my TA routine and try and get in on that. So as you can see, this wasn't a really big TA video. It was more or less just really getting down your indexes and how you should really look at them when you're kind of looking for what's lagging, what's moving too far ahead. And it's just overall good to look at for awareness. Really, awareness is everything. Preparation is really most of what you do, but again, that's with the TA routine, the charting techniques I teach you all. But this is really helpful for being aware and really knowing where everything's at within each index and ETF. And why I said in the beginning of this video that you can use this for everything is, and by the way, if you guys need any of these watch lists, they're all in the chat. I put it in the daily watch list channel, so if you need any of that, here they are. But a really big thing, though, is it's not just indexes. So let's look at XLF. XLF is for the banks. So if I see the banks breaking a trend line, and I go look through the financials, let's go do that real quick. Let's go find something that isn't falling through something yet. So look at that. Still has really good potential to move down more. Already down a little bit. Has potential to move down more. Has already moved down a little bit. Has already moved down a lot a bit. Has moved down enough. It looks just like XLF. So I'd say that one's on par. CME, very behind. Goldman Sachs, kind of catching up, sort of selling off now. So you see what I'm doing? I'm getting a placement for where everything is in comparison to the ETF that they are inside of. They are inside of XLF. Okay, so XLF is moving down. What's not moving down the farthest? So let's go look at those. SPGI, S&P Global, it's up. Let's look at SYF. SYF is trying to go down now. So, that's a big thing. And let's go look at TAN with solar. So TAN picking up off of its trend line. Let's look at solar now. Canadian Solar still holding base range. It had dilution news right here, so it's actually really good that it's holding base range right there. DACO, which they're Chinese, very good global energy. You can see they're still pushing down, so that might be a good laggard to catch up on pretty soon, since everything else in its sector is moving up and it's moving down. EMPH, I would say it's moving exceptionally ahead of schedule. FSLR still moving in on par. Run, I would say, is ahead with ENPH. Sedge, perfectly on par. SPWR on par. SunW, a little bit behind, on par-ish. And then this one's on par. So as you can see, this is tan. Duh, it's on par. But again, going to your ETF, understanding the components within the ETF or index, and then figuring out the positioning of where they are on the charts, and then kind of basing off of that. So 1, you'll find laggard plays. 2, you'll kind of have a better understanding and confidence in where you think a certain sector is, or a certain index or ETF is, or where they should be at. And it really will add a lot of confidence behind your trading too, if you're in any of those stocks for trading or for setting up a trade. So I hope this video is helpful, and I'll see you guys in the next one.